I'm Eddie Cannell.
And I'm Tom Cannell.
We're the Mortgage Brothers team, and this is our podcast. Another episode today talking about new jobs.
New jobs.
Getting a mortgage when you get a new job, or when you're in that job transition, how do you get a home loan? And for a lot of people, it's kind of nerve-wracking. They're planning, it's relocating right into a new town and trying to get a new job, or you're moving from one town to the other, or you're just simply moving down the street into a new house, and you're trying to do this and juggle it around a new job.
And I always try and put on the other, the listeners' hats, or the lender's hat, because we're a broker, or the borrower's hat. And I'm thinking, when it comes to a new job, it makes so much sense asking this question: how does a new job affect a mortgage? It's brand new. Anything new is unknown.
Right.
There's lots of variables. So those listening, like, well, what's the big deal about a new job? Well, to some people, it really is a big deal, because when you boil everything down, it's brand new. So how does the brand new aspect of a job affect a mortgage?
What we should probably do, I think when we were talking about this podcast, is talk about the types of new jobs that people get, right? There's easy scenarios, hard scenarios, and completely, unique ones. And
and so why don't I do this? Why don't I'll just tackle the easy one.
Okay. So what's a easy new job
easy
situation for a mortgage? When you're applying, if you called me.
And this is a true story. So I just talked to a borrower 2 days ago, and he's in defense. So he's an engineer, and he had employment with Raytheon and was working down there for 18 years. And he called me wanting to get pre-qualified for a home and was just stressed. He's like, Tom, I'm all stressed. I got this new job.
Right.
New job. I want to buy a house. I can't believe it. It's with General Dynamics. I'm making 100,000 per year. Is it going to mess anything up? And I said, how long you been doing what you're doing? He's like, about 20 years. I said, are you doing anything different? And he's like, no, it's the exact same thing. So from a lender's perspective, it's as if there's no change, zero zilch.
Yeah.
So from the most easy standpoint, a job change with something that has as much history and is as consistent as that, no issue whatsoever.
Yeah. What you just explained was the easy. That's the easy new job. You call us with a situation like that where you've been an engineer 20 years. That is low risk for the bank. The bank is like, hey, no problem. Just give me the offer letter of the new, the new employer, and the loan's basically approved.
Make sure what you start the job at least before your first payments. Yeah.
Yes. So
that's probably the only thing.
So people in a situation like that, where it's very easy, very low risk, the banks are allowing you to purchase your new house, right? Purchase your new house before you even start your job.
Mm-hmm.
Now, that will be difficult to do and really not realistic for new jobs, people who have more difficult, more challenging, new job scenarios. And I think that's probably what we should talk about next.
Yeah. Okay. So we want to give them a quick little example of what kind of a difficult job would be.
Okay. So let's say a borrower calls me and they're getting a new job right now. Let's just say with Enterprise Car Rental, and they're going to get paid a salary, but they're going to be starting that job here very soon. But they were just working at an auto company for 4 months before that.
Checker Auto Parts.
Okay. So let's just say it was Checker. Before, and they were only work for Checker for 4 months. Before that, they were they had like a 2-month gap.
Right.
They were bass fishing.
And before that, they were working at the local car wash.
Yes. Okay. So let's say they're working at a car wash. So this person's getting a salary now. So, they're getting a salary, which is great, but you can already tell this 2-year history. And of course, folks, 2 years is really what we need for employment. When you look at the last 2 years, there's a lot more risk on this. It is not easy for a lender to say, no problem, this is easy. What we were going to say to a borrower like that is we want to see that you can be on the job for at least 60 days. Now, I'm saying that, and I'm not an underwriter. It could be we could do the loan potentially with the 30 days of pay stubs, but I think that we should be realistic. If you're listening to this and you have a new job and you've had a situation where you have more than 2 jobs in the last 2 years, be prepared to prove that you can stay on that job for at least, well, I would say 30 to 60 days, and show us those pay stubs.
Okay, good. And that's we have people that are coming from a couple of part-time jobs that move into full-time, those that move from full-time into a couple of part-time jobs, and there are new jobs out there that really are can be complicated because of the timing and how they interweave together. Again, the dual part-time versus the full-time. So
Yeah.
if you have any questions on that stuff, and we debated on how much do we try and dig up in this podcast. It's amazing once you start looking into it. There's so many different scenarios. So if you do have questions, let us know. But one of the big things is we just wanted to identify there's going to be the easy scenarios and then more complicated.
Yeah. And I'm just going to say one more thing that
Yeah.
when you have the higher your job, like if you have a job that is very stable, the higher stable jobs come with really these job offers. These job offers come with like these guaranteed start dates and stuff like that.
Hmm.
And they usually come with, there's background checks and stuff like that. When you get a new job, that new employer is going to have these offer letters. Each offer letter is going to be different. Just tell the lender, tell your loan officer about what you have and what you don't.
Yeah.
It's one thing to have an offer letter versus a verbal offer
Right.
of a
Okay.
start date.
So that's good. So we have the very easy bucket, which is
Mhm.
W-2, a more senior position or mid-level position, been doing it for years and years. You get a new job. Great. No problem. Just make sure you start the job, prior to your first payment. Then you have the more complicated bucket, multiple jobs, a little bit of a job, industry change. Now, how about the
Yeah,
bucket?
in job title change, like you're going from one job title or one job position to another.
Hmm.
All those are all in that same difficult bucket. Anyway, just
What's an example of a job title change? Because every job has its different
yeah,
titles. We don't mean the slightest change. We mean like big
yeah. You
changes.
go from like office management to maybe making a salary at office management to doing an hourly wage
With
clerk job or
yeah,
I'm sorry, like a sales,
yeah.
something that would be
Okay,
hourly but more in sales, or
good.
or let's just say you were a restaurant manager, that
Right.
happens.
Yep. Okay. Now, how about this one? And this is not. It's not complicated. It's I'm trying to figure out the word, and it's very important. It's those that call up and say, "Guess what? I just I just got a new job. I'm starting my own business. It's
Mhm.
a mobile, mechanic, or it's a mobile XYZ. I'm so excited. I'm paying myself 80,000 a year and I'm ready to get that mortgage."
Yes.
I mean, those it's like bells are going off all over the place. So
So what you're describing is someone who wants to become self-employed.
self-employed,
This job change is actually going from a W-2 employment to a self-employment.
right? Which also could be 1099.
Yeah.
So what are we telling our borrowers
Yeah.
when that happens? That's
It's
kind
a,
of a tough conversation.
it immediately puts them in limbo for 2 years of tax returns. I mean, we're basically just saying you have to sit tight, be profitable for 2 years of tax returns, show the IRS you make money,
Hmm.
and then we can talk about getting a loan. In
Yeah.
some cases, 1 year, but we to just be safe, 2.
And I think the 2-year period makes sense to a lot of people. You
Yeah.
know, it's a trial period. It's like being at the rodeo, and if you can hang on to that horse for at least 15 seconds, there's a good chance that you're going to be able to hang
Y-
on to that horse again in the future. So if you
Yeah.
can stay at that job, or there's stability for a couple years, then it's very likely that you're going to have future stability.
But here's a really interesting scenario that happens. Someone calls me, I've been a doctor for 20 years, they say, right? I've been a W-2 physician for 20 years, and I'm an orthopedic surgeon. I'm just going to start my own business as an orthopedic surgeon. I have my own clients. I mean, it's going to be easy to transition.
Yeah.
And in many ways, they're right.
I'm going to make more money.
Make more money. I have all my clients set up. The moment he goes self-employed, no matter how great his chances are of succeeding, the bank will not give him a loan.
Mm-hmm.
Okay, so it doesn't matter how easy or how much you try to convince the bank everything's going to be great, or so easy. They just won't give you the loan.
Right.
How about the vice versa? If you are
Okay.
self-employed and you're like, I've been a doctor self-employed for so long and I can't stand taking care of employees, right? You go into self-employed, you're in the self-employed industry or sorry, any industry, and you decide to go work for someone in that industry. No problem. It's when you go from self-employed to W-2 wages to W-2 employee, that's easy.
It's basically like you've been a W-2 employee the entire time.
Yeah,
So to go the other way is a piece of cake. And we've actually talked to borrowers. I don't know how many borrowers have done this. I bet you there's at least a few where they've gone self-employed, and after realizing the hurdles they're going to have to overcome, they actually leave the self-employment for a while and they go W-2
yeah,
to
that's
buy the
right.
house. I
Mhm.
mean, it's like
and we don't want our
it's like a light
customers
switch.
manipulating the system and trying to go get a job and then leave. I mean, but a lot of them do believe like sometimes they're just not profitable, and after they try to get a loan, they realize, why the hell am I self-employed?
Right.
I just want a house, and I can't.
Right.
I don't make any money. I can't show any profit in my business. Maybe I'll just hang up the self-employment hat and go be an employee and make a good living. So there are those who just, I think, honestly, just do that.
Yeah. All right. What else did we not cover? We didn't
Yeah.
cover job gaps. This wasn't
Yeah.
a situation of any type of job gap.
And we'll have another podcast that covers employment transfers. Okay, so
that's a good
if
one.
you're looking for a podcast talking about employment, when you work for Raytheon in Orlando and you transfer to Phoenix, we'll talk about that in another one.
Awesome. I think we covered it.
And we do this every week. Tom, we talk about the answers to these questions that borrowers have. Please subscribe to this channel, like it, give a comment, ask a question. That's what we do. We're here to help. And
always.
Everyone just hope that all makes sense.
Okay.
And stay tuned.
All right. Have a good day, folks.
Hey guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917 and 1618695, Equal Housing Lender.